What is going on, Steady Trade Treats fans? My name is Bryce Toohey, and I'm back with a new form of caffeine. This time, it is pre-workout explosion. So if I explode during the middle of this video, you know why. So today, I wanted to give the gift of giving. We're coming up on Christmas time, and I love giving. And actually, I was having a conversation on Twitter last night with someone who messaged me. This conversation came up about kind of the periods of a losing period, a drawdown period, when you might be overall profitable. It doesn't matter if you're using small size or not, but you're having that drawdown. The market's hot, everyone's throwing up big numbers, and for some reason you're having trouble. What do you do? And I came back to the two times that I had a drawdown period. I sized down in May when I was using a $2 risk. I've had two drawdown periods, and I handled them both the same exact way, and the results show. So let's throw these two graphs up on the screen right here, side by side. The one on your left is my drawdown period from like July, early July. This one is from October. Now let's throw up the one from July. Look at that. So this was, right when I was using small size here, and the drawdown period I think in total was a little over $600, but I was only up about not even $6,000 with my overall P&L from May until then, which is when I again sized down. This was roughly a 10% drawdown to my account, and it was devastating. I was like, why am I going through this? And I said, what do I need to do to really get back on track? Because clearly something isn't working. This is a really rough drawdown period. It was pretty fast. It was over the course of like under a week. And then I said, I'm sizing down. I need to reevaluate. I need to refocus. And notice how the period we're coming back, where I was coming back up there, was actually slower than the drawdown period. That drawdown period was steep, slow build, come back. Notice that. Now compare it to this next one from October, where that drawdown period was about $4,000 from peak to trough, and I was only up about $30,000 overall P&L wise at the time. Again, about 10%, a little bit more drawdown for my overall P&L. I did the same thing. I said, how am I going to get back from this? This again felt like a devastating loss, and I didn't know what I needed to do. So I said, well, I'm going to use smaller size again. The only way to really come back, and the results show that it works. In my opinion, a drawdown period, especially during a hot market, shows and represents an inability to adapt to the current market. There are different trends happening in the market all the time, and those drawdown periods are a very big representation of your overall lack thereof of an ability to adapt to that market. And so the only way, in my opinion, to really refocus is that smaller size, and I like seeing that comeback period slower than the fall down period, because it shows you use smaller size. And one of the biggest issues new traders have is wanting to make back their loss right after it happens, whether it's on a trade-to-trade basis or a day-to-day basis. If you have a pretty bad red day, you're inclined to use bigger size the next day to make it back. If you take a really bad trade, you're inclined to use bigger size to make it back. And I've been there for both of them, and it doesn't work. The best way is to use small size and really reevaluate. Be okay with missing out on some of the best opportunities because you wanted to use smaller size. That is a testament to discipline. And it's hard because your P&L curve is like a representation of how you are as a trader. But the fact of the matter is that applies to a long-term basis. Your long-term P&L is your representation of who you are and how you do as a trader. Your short-term P&L trader is more so a representation of how you're doing with the current market trends. And so I would rather sacrifice a few possibly great days for a couple good consistent days. It's worth it over time. You need to have that kind of discipline in trading. And it's hard, I get it. When other traders are throwing up 5-figure days and you're sitting here like, well, I want to be consistent, so I'm going to just really size down to like $50 risk per trade. Do it. It's okay. One of my good trading buddies, one of the things he always says is stay in your own lane. And I love that. I've come to love it even more. You don't need to be like the guy next to you. Maybe the guy next to you is making 500 grand this week, and maybe your other buddy's making $10 this week. If you're doing what is best for you, for your account size and for your knowledge level, you're doing it right. So when you're having that drawdown period, do what works for you. And what's worked for me is sizing down and slowly building back. And then as you build that confidence, you get back to normal size, and it gets exponential. You see it in both of those graphs. By the time that when the build back really starts, it starts getting exponential again with the same size you're using before, just because you adapted better you are refocused. It's a really great way to do it. And I know this is a little bit of a longer video, guys, but I think it's so important. So that's my gift, is teaching you how to lose, how to be a loser. Trust me, no one knows how to be a bigger loser than me. I can promise you that. I sit in my room all day and do nothing. But no, for real, guys, have a very Merry Christmas. I'm not going to have an episode out this Friday because, again, it's Christmas. Enjoy the time with your family. Just relax, refocus, do a little bit of preparation because you don't want to be totally ill-prepared on Monday. Merry Christmas, guys. I will see you on Monday for your post-Christmas edition of Steady Trade Treats. Peace out.